It's Monday, August 18th. Let's level up. Market had a bit of an up open and of course got sold into because that's been the problem lately. We see these up opens, they get sold, although down opens have been getting bought as well. So it's sort of a push me, pull you type of situation. They tried to give VIX a run. It stalled between the 1570 and 1697 level. It didn't even get much past 1570. I would say if we can get past 1570, 1623, and then 1697, the bears may have footing and we could see a bit higher volatility. I would feel better in terms of the market if we were able to come back down and retest the descending wedge low at 1371, but of course descending wedge lows usually lead to breakouts, just like ascending wedge highs lead to breakdowns. As far as the ES and the NQ go, we did have an all-time high in the overnight session, so that likely won't stand indefinitely as a good high. Doesn't mean we can't have liquidation breaks between here and there. I'm keeping an eye on a few things. First is the 64-68 half neckline. If that can clear, the bulls are better off than not. I'm also keeping an eye on 64-85 half, which was the bounce high from Friday session. If the bulls can clear that, I think they're out of the woods. Anything below there does risk still further liquidation break. 64.53 quarter, and if we were to open up on a new little channel I've drawn in low, that would be 64.4675. If we do keep dropping after that, it's 64.2675, and then there's a mini support zone between 63.72 half and 63.87 half, and then we'd see. As far as the Qs go, they're consolidating also in a bit of a down channel. It wouldn't take as much for the Qs to break out here. They just need to get over the apples to apples neckline at the 23,845. That would be the equivalent. If they can get over that and stay over that, I think they're back in business. Generally also, I like to see if it can clear the 200 MA 30-minute. That had been prior support. It is now acting as a little bit of resistance, but if that can clear, I think the bulls are back in charge. If it stays below there, it's probably still more sideways chop with liquidation break potential. As far as SPY goes, few days of consolidation here. I had warned you guys a few sessions ago on the 13th that I saw that Dragonfly Doji at channel high. It wouldn't surprise me to see a check back to the 731 high at 639.85, maybe an overshoot to the 10 MA, currently 638.54 and rising. But generally, as long as those hold, it's still fine. Anything below that could see a check back to the 20 MA at 635.58 and rising. If we were to pump up to channel high again, it would be 648.58. But I do think that the bulls will need to clear and stay over 646.19 reference high. Anything below that to me is again just sideways chop with liquidation break potential. As far as the Qs go, they've had a little bit more of a pullback. They're very close to the 731 reference high at 574.63. If that holds, it's fine. There could be a little overshoot to 573.90. That's the 10 MA, but that's sort of about it. If it gets below there, we could check back to the 20 MA at 569.09. On the upside, it wouldn't surprise me to see resistance again at the 583s. If we were to go to the magenta channel high and we did it tomorrow, it'd be 584.27. The probability of the Fed lowering interest rates in September is coming down a little bit. It's still pretty high though, it's 83.6%, but the prior session it had been 85.4 and the prior before that 85.9. In context, a month ago it was only 55.9, so it's still higher than it was, but it isn't coming in as high as I think traders would like it to be. It does not surprise me that there'll be a little bit of ebb and flow, particularly when you get from near certainty, there's really nowhere else to go but backing off until the actual event. We're seeing a bit of a pullback in the TLT. Anything below the 20 MA to me still remains a little vulnerable at 87.02. If we were to pull back to channel low, that would line up perfectly with the 84.89 reference lows. That is a must hold, and it could also become a higher low here since we had two prior lows a little bit undercutting there. Apple still looks pretty good, consolidating. Bit of a pullback here, doesn't surprise me. 225.38 could be some key support. If that fails, the 200 MA at 221.04. I do think if there's a larger liquidation break, the buy the dip area is actually the 214.66. Remember, moves above it weren't sustainable. Now my guess is if we do pull back there, that would be the buy the dip opportunity. And I will have alerts and orders set. Nvidia is still acting pretty boss, still over the 20 MA. As long as it's over 178.03, it's fine. Bulls there need to clear 183.30. We're just consolidating under those highs. It's sort of just bubbling under there a little bit. Wouldn't surprise me to see a move push up close to the 200 if we do get a bid in the market and we are able to break out. If you want to do some kind of 1/2 put ratio, maybe buying 180, selling 164s, 165s with an overwrite down near 150s or 155s, I think that can work as well for a bit of a pullback play, particularly a hedge. If you want to sell some upside calls, probably do something a little over that 200 level. Tesla pulling back here. It's the 319.03 to 325.10 area that must hold. Anything below there to me gets to be a bit too much. Right now it just looks like a bit of a consolidation and a very mild pullback. That 351.39 to 357.54 area is the next big upside target if it does catch a bid. Novo Nordisk trade has been working very nicely. We did hit the 20 MA and pull back. I have an alert set over the high of day, 54.99. We did see 57 in the pre-market session, so it wouldn't surprise me to see that. My end range, at least for this trade, is the 57 to 58.95. Could go higher after that, but it'll do it without me. Remember, we got into it with the look below and fail of the 47.62 level on 8.7. Bitcoin is often an early warning indicator, and it has been flashing some weakness. A lot of people didn't like what they were doing with the Bitcoin reserve. They thought that they were going to buy new Bitcoin. They're starting out with confiscated Bitcoin. That makes a lot of sense to me. I do think the 50 MA on the first test could be a buy the dip, currently 113,592. Generally, though, the bulls had a bit of a look below and fail with 115,000. You could use that as a short-term level. I'm actually using the 115,635 level. That is a must clear and hold, and I'd feel better on the long side back over the 20 MA at 117,722. If there's a larger liquidation break, the next big key levels are 113,045, and then this big chunky zone from 108,960 to 112,345. with the old reference highs from 121 at 110,150. I think that zone will offer up some key support if we do pull back to there. Seeing a little bit more rotation, even stocks like Meta, I think that that's going to be caught between the 740 and 784s, 785s for a while. Maybe gets a little bit of a boost up closer to the 800s, but I do think that that's going to be in consolidation and chop for a bit. Do like playing that maybe for some strangles or even iron condors up here. Near dated, of course. The googliness acting pretty well. I told you we'd get the 200s. 207s as reference highs. No surprise that we're seeing some sellers there. If we pumped up to the yellow channel high, I'd be closer to the 214s, 215s, depending on how long it takes to get there. I think you could use the 10 MA, the 200.53-ish area and rising as the must hold on pullbacks. If that fails, the 195.77 to 198 area was a key resistance level for a while, and that to me is an absolute must hold. Could be a right or right out by the dip, but it really does need to hold or we're in for a larger pullback. Generally speaking, markets are coming in near highs. Seasonally, this isn't the best time of year for stocks. It doesn't surprise me to see a little ebb and flow and some pullback. We have Labor Day in about 2 weeks. A lot of people are going to be taking off the end of the summer for summer vacations, back to school, you know how that all goes. I think that we're going to be trading a lot on headlines. We're through all the big earnings here. I think that if the interest rates continue to rise, that could be problematic for the market. I think that pullbacks will ultimately be viable. It may take till September or October. It may even happen sooner. We'll see. We're in a pretty bullish tape. But I do think there will be an end of year rally, and I have been liquidating longs, as I've told you guys, into some key resistance levels and looking for some opportunities on some pullbacks. I am starting to slowly wade into those 1/2 put ratios, but doing it very small size here because we have very low VIX, and I don't want to get banged out on a Vega pump if we do see a larger pullback and let's say a VIX that spikes to 21 or 25. If you want to do the 1/2s or the 1/1/1s, I like doing it smaller size, but be sure to be meticulous about picking strikes that you don't mind actually owning the stock. Like and follow for more.